Well, I own the dollar, as we talked last time, and I think the dollar is going to go higher. At least I hope it is. That's why I own it. Against the major currencies, as it's going up against the real, it's going up against the euro, it's going up against everything right now. There are various reasons for that, one of which is everybody's panicked, and for some reason they're rushing into the U.S. dollar. Now, the U.S. dollar is not a safe haven, if you ask me, but I do own it.
Well, Jim, that's what I wanted to ask you. By the way, you're not running up a flight of stairs. It sounded like you just ran up a flight of stairs. You're okay, right?
Yeah, no, I had to run over and turn off my TV and turn off my computer. I had to turn off all kinds of things.
All right,
because it was interfering with the broadcast.
So there's so many viewers that want to find a safe haven right now. If you wanted to park some money and you just wanted to be safe, what would you do right now?
Well, right now I would own either the U.S. dollar or the Swiss franc if I were putting new money to work, or agriculture. Agricultural prices are getting banged right now. I'm contemplating buying Swiss francs, more dollars, and agriculture.
You know, we're looking at the losses in copper today, Jim. Of course, concern about the Chinese economy. You know, do you share that concern, or is this overdone today?
Well, China's been trying to cool its economy off for a couple of years, David. They've raised interest rates 6 times. They've raised reserve requirements a dozen times. They're doing their best to cool things off, and so no, they want to cool it off. I expect them to continue to do it, and that is causing more slowdown around the world. But the major problems are coming from the West. They're coming from Europe and the U.S. You know, we're much worse off than we were in 2008 because the debt has gone through the roof since 2008.
You think
at government levels, at least in 2008, there was the possibility that governments could bail us out.
Right.
Now, of course, the governments have gotten deep, deep, deep into debt themselves.
Right. Of course, we moved a lot of the debt from private hands to public hands, as you say. But, I mean, worse off than 2008 here in the States, or are you talking largely there, about Europe when you say that, Jim?
Talking about the U.S., too, David. The U.S. government quadrupled its debt in that period of time when you take into consideration the thing which the off-balance sheet guarantees which they've done. You know, they took Fannie Mae and Freddie Mac's off-balance sheet derivatives positions. Those are trillions of dollars. No, the U.S. government is in much worse shape. Everybody's in much worse shape. All governments around the world. And, you know, pension plans are getting killed with low interest rates, very low interest rates. Pension plans have to be funded by somebody, so companies are funding them. States and municipalities have to fund them even more. I mean, this idea of Bernanke's interest rates, low interest rates are good.
Yeah.
He's killing the people who save and invest, and that's
Jim,
really hurting a very, very, very large part of the population.
Yeah, Jim, we tried to make that point early in the program. Let me ask you about Europe and the banks, because you're there. You hear what the banks say. They don't need capital. The market says they do need capital. You've got a good feel on this. What's your read about the European banking system and the need for capital?
It does need capital. Like, they've got all these Greek bonds. They've got all these Irish bonds. They've got all these pigs bonds, as they're called now. No, they all need capital. The only solution that will work is if they can all gather in a room and say, okay, we're going to have to write off loans. We're going to have to take big losses. You, whatever Bank X, you're going to suffer, but we're going to put a ring fence around all of you. We will support all of you to keep the system alive so that people can take money out of the bank so checks can clear, et cetera. But there are going to be huge losses taken. If they don't do it now, you know, if the market makes them do it in a year or two, David, Gary, then it's going to be uncontrolled chaos. Right now, you could have controlled default if you did it now. If you don't, if you wait a while, it's going to be uncontrolled default.